Hello and welcome everyone for our weekly trading update for Tesla. So as you know, we are in the age of AGI. I believe Tesla is the central eye of the storm of the AGI revolution. And it's starting now, this year, with the introduction of Robotaxi. So this week, we are going to take a look at the stock and what I actually think is going to happen and most likely to happen in this complex environment with tariffs and everything happening. So let's start with a little macro overview. Launched a video earlier today explaining the China-US tariff standoff and where we are in this whole thing. But let me recap this very, very quickly, just a second before we jump into Tesla. So on the tariff summary, we are now at 10% tariffs on the rest of the world after Trump basically introduced a 90-day delay on all the other tariffs outside China that led to one of the biggest market gains we have ever seen. I think the second biggest in recent history. It was crazy. 13 or 12% up for the NASDAQ and Tesla up 22% and all the other stocks just because the tariffs were delayed for 90 days with 10% in. Now, this all comes down, as I predicted before, to China. It comes down to China and the United States. And what is the deal? So China right now has enormous tariffs on it by Trump, 145%. But Trump just announced an exception for electronics, which actually make up 30% of all tariffs or all goods exported to the United States from China. So it's a 30% exception. And these tariffs are now lower on electronics than they were before Trump, which is a little ironic when you think about it. So this exception now for 90 days on the electronics while they further negotiate are lower, as to my knowledge. It's very complicated, but they are 5% lower than under Biden. So Trump promised us crazy tariffs. We will show it to China and onshore everything. Now suddenly the tariffs are lower than before Trump. A little ironic, but let's see what's happening. My prediction is when you think about the economics, when you think about the first principles that govern Trump's actions and Xi Jinping actions, both are under enormous pressure from their respective elites, the billionaires, Wall Street and Silicon Valley guys, from Elon to Chamath to Bill Ackman to David Sachs behind Trump, and the Communist Party of China, CCP, behind Xi. Both of them push Xi and Trump to resolve this very quickly because the current situation is untenable. It will lead to complete economic Armageddon, as everyone knows. So we know it can't last. And I think it's very clear what the demands are from the United States. Watch my other video if you want to know what these demands exactly are outside tariffs on China. And there are some demands from China to the United States that offer everyone to save face and get to a deal. So my prediction is, to get to the point, very likely way before July 9th, we have resolved the tariff macro situation. Likely the whole thing is over before June, or at least signals to be over so the market forgets about it. Hey, creating these videos is a lot of work. Please like and subscribe. It really helps out the channel. Now let's get back to the video. And that is very important for Tesla. Why? Because if the macro situation with China is being resolved from a market perspective by June, we are entering something like a Goldilocks moment. And the Goldilocks moment is that we are basically now coinciding on the historic timeline with the end of the tariff war and a macro relief rally for the markets, and the most important, potentially the most important point in time in the history of Tesla in its transition from an automotive and energy company into an AI company. And that is, of course, the launch of the Robotaxi. So the Robotaxi is scheduled to be launched as a commercial service, fully autonomous, ride-hailing service, no drivers in these self-driving amazing cars, the cybercabs, in June 2025, which is less than 10 weeks. It's actually 8 weeks away now, in Austin, Texas. Now, that's just one city, and it's not going to create massive amounts of margins and, earnings just from that one city. But, of course, it's signaling to everyone that this actually is happening. So how do we think around that to actually decide what that means from an investment and trading perspective? So some people say, well, that's a typical sell the news thing, right? You have a run up into this event and then it's selling the news. Well, there are two problems with that theory. First of all, there is no run up right now. The stock is absolutely hammered at a ridiculously low price right now, given what that could mean. Maybe there will be a run up. We will, reset that and think about wherever we are now, but we are talking about now. And the stock is at a, low point. So look at this. We are here. Let's take a 1 year look. The stock was here, it was at 168. This was, of course, completely ridiculous. But on a 5 year level, 2021 went all the way down here to this ridiculous point, to 113 in 2023. I remember that one. And then went up here to 274 and then down here last year. And then, of course, people realized what's happening and it went to 488 in December last year. And then it has this crazy dropped way more than the market and way more than its beta. So now it's like in a relatively very weak position, because look at this, in 2021, it was at nearly 300. That's crazy. That's 4 years ago. And in the meantime, Tesla's earnings have exploded, the revenues have exploded, and the AI capabilities have absolutely exploded. It was absolutely unpredictable or not predictable that Tesla would be able to launch FSD, full autonomy, in its cars in 2025, even a year ago. You couldn't have really predicted that. But with this dramatic improvements in FSD, now it becomes more and more likely. So that's where we are right now. So we are at a relatively low cost point. This is not just a random little event in Austin. This is the decisive point in time where it comes down, and the question will be potentially answered. Can Tesla actually launch an autonomous ride-hailing transportation infrastructure? Why is this so important? This time it's different, right? It is different because this is not a small little thing. If these conditions are met, if it's less than $1 per mile and doesn't take too long to get hailed, but that is an obvious function of how many of these robotaxis are in the market, it's the biggest disruption in transportation that has happened since the invention of the car. It is this big. Because if you fall under $1 per mile, which these robotaxis, of course, could do once they work, because they don't have a driver, which is the main cost factor, and Tesla is also an absolute master in bringing costs down for these robotaxis, the cybercabs. Here for these beautiful things, they will cost probably $15,000 to build at scale. So if that happens, imagine the impact on transportation. No one needs a car anymore. You can eat up the entire car industry. No one needs truck drivers anymore. You can eat up the entire truck industry. No one needs public transportation anymore in a 100-mile range. You can just, instead of trains and buses and all these things, now you can actually take these robotaxis. Imagine you go 2 miles and it costs you $1.80. That's like a bus ticket. So the interesting thing here for us is, this is a $7 trillion market. I will do more videos to have a high resolution insight into that, but it's roughly $7 trillion in market you unlock with this thing. It is huge. Hey, if you want to stay ahead of capital markets and the next Tesla moves, join us in Pioneerlands. Here we track Tesla, capital opportunities, AGI disruption, and politics. It's your critical information advantage in the age of AGI. It's free, and the link is in the description. Let's get back to the video. And Wall Street right now basically puts a 0% chance, close to 0% chance, that this happens in June. Now, I'm remaining skeptical. I think there's many problems, who knows? But I think at this point, we are at an over 50% chance of June actually launching and working. And that sets up a very interesting trade here. So, the metrics will be very clear. We have to look at what is the dollar per mile, how much do they charge, how many people use it, what are the cogs, they will tell us more about how much this actually is to operate. And will we see the cybercab in action? There was a lot of speculation that it's just Model Ys and 3s. I am very sure it would be so stupid of Tesla not to use cybercabs. And of course they can deploy 20 cybercabs. It's easy. They already did this on AI Day. So I think they will have cybercabs on the streets, very likely. June, that is in less than 8 weeks. It comes down to a very simple question. Does it work? Can Tesla really pull this off? And the way I see it is June is just the first shot on goal, right? Here's what I think in terms of probabilities, right? In terms of probabilities, well, let's first say what I think is needed to have specifically a list of what is needed. It needs to launch in time in June. There needs to be no accidents or no major, of course, if there's a little scratch, no one cares, but nothing disturbing where people say there's a safety issue. There needs to be a critical mass of these self-driving, autonomous vehicles. I would say more than 40 for Austin. Why? You need a critical mass, so the wait time is not too long. It needs to be less than 5 minutes. So it needs to be in a limited area, at least 40, ideally more, ideally 100, then they totally win in terms of wait time. They need to have the cyber cap in there. Without the cyber cap, it's lame. We want to see these things on the road because they don't have a steering wheel, and that sends a decisive message to the markets. And it needs to be clearly, obviously, on a path to less than $1 per mile in order for the analysts to really believe this can roll up the entire transportation industry quickly. Wait times and complaints, of course, there needs to be a positive feedback. And of course, we need to see these metrics. So I think in the earnings call in July, in a perfect scenario, and this scenario is absolutely possible, it's absolutely in the realm of possible that we get these metrics reported in July and they're good and it's absolutely game over. And some people ask me like, how can we know if Wall Street understands it? Maybe it all works out, but then no one believes it still, or they're still hesitant. How do we know the stock actually moves? Well, I call it AI porn, not porn generated by AI, but AI porn. When do you know? How do you know it's a breakthrough? And it's like AI porn, yeah? You know it when you see it. There's this old joke. There's the debates. How do we know that something is porn as opposed to like a romantic movie or something? And it's actually very hard to break it down, as points. But the joke, you know it when you see it. Okay, this is this, and this is something else. Here it will be the same. It will be the same. When we see the videos and the images of this stuff happening, everyone will know, is that autonomy or is it not autonomy? It will be obvious. Why it's so important to have these cyber caps without a steering wheel. And if we see it and we know it, people underestimate what this does to the stock. So I believe once this point in time has been reached and we see that AI autonomy porn, Tesla stock will go up from here, if it stays around here, 2 to 3 times, 200 to 300% in very short order. Because people are not that dumb. They will understand this is a $7 trillion opportunity. There is no competition and it's game over. So it all boils down to the question, will it happen in June or will it not happen in June? That's why I use the porn example. Maybe something happens in June, it gets launched, it looks good, but it's just, you look at it like, yeah, this is like not really it. Or are you going to look at it like, this is it? There are cyber caps driving around. There's an app I ordered. It comes, it's cheap. It gives me a ride somewhere and I'm done. And everyone uses it. This will be big. So for us, now the question is, what are the odds, the percentage odds this is going to happen? Here's how I see it. The odds that this doesn't work in June, the full spectrum, right? What is needed? Like this full thing, the odds that this does not all happen in June, I would put at over 50%. I think there's an over 50% chance, slightly over 50%, that one of these things is not going to happen. So this thing is not going to happen, right? So we see it and we don't totally, unless we are total Tesla fanboys, but objectively like, yeah, it's just a bunch of cars and they are remote drivers, whatever, they have steering wheels. The odds that something is not enough to really ignite these fantasies, I think is over 50% right now. It might go down more. But that means we have a nearly 50% chance that all of this actually happens in June. And that means we have, in my opinion, a nearly 50% chance that we see a 200 to 300% raise up of Tesla stock, especially given the macro situation and the resolution of these tariff problems. That is a pretty good chance if you are into trading, because you think, wow, that's crazy, because that is not priced into the options, for example. What does it all mean? So if that's the big picture, if June is this first shot, well, let me first explain what I think happens next. If it doesn't happen in June, I think, there is there is basically, let's say, a 30 to 50% chance it happens in June, or effectively in July, August, when these numbers are reported and it dawns on everyone. So there is a 30 to 50% chance after the earnings end of this month. I will tell you if I think it's more 30 or more 50% or something else. Cannot be more than 50% after earnings, but it could be less than 30%, depending on what Elon and the team tells us on April 28th, when we have Tesla earnings, and it will all be about the outlook for this point in time. So by then we can narrow this down. But for now, I'm saying there is a 30 to 50% chance that the stock rallies up like insane in July and August. But there is a 70 to 50% chance it doesn't. But if that happens, if these 50%, if these 50 to 70% chance that something is not perfect in June actually happens, I think there is a 90% chance that it will happen in the 12 months after, so 15 months from now. So by June 2026, I think there is a 90% chance that this whole situation will happen. And that means there's a 90% chance that, not considering optimists, there's a 90% chance we will be up 200 to 300%, which means we are at 500 to 750. There's a chance we get higher, but that's what I think. So we are not up by 200. You know what I mean. We are 200% from where we are now. Given these odds, what is best to do? Well, if you are a all-in stock shareholder, you have an easy life. Buy the stuff, keep it. You don't care if your stocks go up 200, 300% in July, or if they go up next year, July. Like, who cares? And then you are off to the races with optimism and everything. So stocks are always very easy. And this is probably very smart. Not investment advice. And this is Tesla. There are always risks. So you have to make sure if you go all into one stock, this is money you can lose. But in my opinion, stocks are a perfect investment right now in Tesla. But if you're more greedy, there's of course options. Now, with the option scenario, you understand the problem, right? We don't know if there's a delay or not. So if you buy a lot of options, how do you make sure you're not getting slaughtered if we have a delay? So the first rule of thumb is you want options that are not decaying like crazy. You want out of the money options, probably because you want to, if that's the alpha situation, that there is something Wall Street prices wrongly because they do not understand the odds here and the upside. That means you want out of the money options because you want higher leverage. But if you, for example, bet on July 1st or August or even September and buy these options now out of the money at 500 or 400 or 350 or something, and we have a delay, you get wiped out. Imagine you have a 3 months delay and you have August options, you're just dead. You lose 100% of your money if you're not very cautious. Even if you realize you're late, maybe in May or June or maybe in April or whatever, we learn, oops, there's a delay and you already invested, a lot of money into these midterm options. You will get slaughtered pretty badly if you wait 1 or 2 months from now and hold these options. And then it turns out the stock doesn't go up. So what I'm doing is I'm staying out of these mid and short-term options because there is just no way of knowing that specific question. But given the bigger scheme that I outlined, it's, in my opinion, worth playing around with options. And so let's take a look at leaps. How would leaps behave? So long-term options. So for example, I give you my insight into how I determine time decay. There's of course theta and some other Greeks you can use. I don't like the Greeks because they're often totally wrong for many complicated reasons, because Greeks are calculated based on theory, not on reality. So, and that theory changes all the time. Not the theory changes, but the underlying inputs change all the time. So I think a more reliable thing is, let's look at June here. Let's look at June 2027, 794 days from now. So over 2 years. June 2027, and let's take a look at the 500 call option that cost you $46. So for $46, you're basically break even if Tesla would be over for $546 in June 2027, which is a little ridiculous. So that seems like a pretty safe bet. But how do we determine how much money we lose? If we buy that leap right now, betting on June, July, August exponential growth, and then figure out, let's say, 3 months down the road that it doesn't happen. So we want to then sell that thing potentially, because then we go into a holding pattern and assess the situation again. So if we are wrong, we want to sell, and we want to understand how much did we lose if the stock doesn't move significantly from here. How do I do this? Well, there's a very simple trick. Instead of doing Greeks, you just go here and select, well, let's just simulate it and say, what about the January, right? So this is like a 4 months, 6 months, I can do the math here. So this is like a 5 months earlier expiration. So what happens here? If you go here, you see it's at 36. So it's roughly $10 or roughly 20 something, 22% loss. If you would wait 5 months, my estimation is you would lose 10% of your money, because you're not waiting 5 months now. You're waiting from now probably 2.5 months, right? So the risk you're taking, let's assume you're buying $100,000 leaps, the June 2027 500, for example. Nothing happens. The stock doesn't move much. It's, I think, much more likely the stock goes up a little bit given the macro situations. It's a safe bet. But if you pull out, if you realize, oops, I think Robotaxi is just not launching hard enough or whatever, it's going to take another 6 months, you lose 10% if you pull out in May or June. So your downside risk is not that crazy at all. And then you can ask the question, if you have a 50% chance of this thing going through the freaking roof, where you easily make probably 100 or 200% on these leaps, if it goes to 500, I mean, you're making, if this goes to 500, the way to do the math here is, you know, right now, the equivalent of being at 500, if we are now at 250, would be to look at the 250. Where's the 250 or 260? It's at 87. So very likely, if this leap would immediately go to 500, it goes to $87. And so that means you're making 87, you're making whatever, 120%. So you have if you agree with me on these odds, you have a 30 to 50% chance of making 120%, and you have a maybe 50 to 70% chance of losing 10%. Now you have to do the math if that's worth it. But that's why these leaps are much more attractive, because your downside risk is very limited, especially given the fact that right now Tesla is pretty low and the macro situation is probably going to resolve a lot. So even if there is a hiccup on Robotaxi, I don't think Tesla has to fall much more if macro remains on the upward trajectory, on the resolution trajectory. So that's how I think about these leaps. And you can do more math. You can also compare 600. 600 is at 26, for example. 600 at 26. If you go back to June, you see that the 600 is at 36. So it's, of course, the more out of the money, the more you lose. So this is percentage-wise a bigger loss. 500 is probably a good compromise. So that is how I see the situation and what we can potentially do on trading. Of course, be very cautious with options. You know how it is. There is always some crazy chance that Tesla actually goes down from here, especially if macro deteriorates. Don't forget there are tail risks. What I said about macro is it's extremely likely that China and US resolve their issues, but there is a 10% tail risk that something goes unhinged and we have a trade war or we have a hot war over Taiwan, and then good night, right? Then things go off the rails. So whatever you do, when you do options, you can definitely lose your money. So be cautious. So I hope that was helpful. That's how I think around it. I think the leaps are something I really like right now, and we will go from here. So hope that was helpful, and see you very soon.